Okay.
All right. So, okay, recall that for me. Say that again. You said so what was your question? So this is your one-on-one.
Hmm.
Welcome to the call. You're the second person to book a one-on-one. So shout out to you. You know what I'm saying? Shout out to you. That's major. We celebrate, things like that around here. But with all that being said, this call is going to be for you. We have a full hour to, run through things in the way that you would like to run through it. You can ask any
Yes.
questions that you want. Um, closed setting. The video will be shared in the community because oftentimes some people will have similar questions. Maybe they
Hmm.
didn't ask it for themselves. But with that being said, uh, how are you liking the information so far? Like, how are you liking the community? How are you liking the info that you're learning? Are there things that you're grasping currently? Like are the concepts sticking and making sense? Have you been able to test any of them out? And then what are the areas where you're having trouble or where you would like to have help? Like what's working, what's not? How do you like it overall? To put it into just
Okay.
three
So
questions.
overall, I think overall, I think the group is really good. I think I'm learning a lot, but I feel like when you say like one of the newer people in the group, I'm definitely a newer person in the group. So I'm literally learning from ground zero. Like I knew nothing coming in. So for me, I'm learning the foundations. I study the sessions like after we do it too, just so that I make sure that I'm grasping most of the information. So I know I'm learning a lot. I feel like I have like the foundation of it down packed, but as we get deeper into it and like actually reading the chart, not really reading the charts because I can read the charts, but when you get deep into it, when actually figuring out trades and things like that, of course I'm going to need some more, support on that and some more help because I'm new to this. I'm not true to this yet. I'm getting there, but I ain't there.
All right,
It's
cool.
getting
So
there.
yeah, we're gonna get there for sure. So we've done 4 lessons so far. You said that the you were keeping up for the first couple of lessons, but the one that you grasped but could use some brushing up on started at like lesson number 3. Like lessons number 3 and 4 is where it kind of started to get a little bit
Yes,
more difficult, we could say, or a little bit more, you need a little bit more work in going over it, correct?
yes,
All right.
yes.
So let me go ahead and I'll share my screen, right? You said that you were using the chart NZD.
Yes.
Okay, fantastic. So this is the NZD USD chart, right?
Hmm.
Um, this chart itself is one of my favorites personally, if I'm being honest with you. One of my favorite currencies, one of the absolute favorite pairs. I love it. It's my favorite. There's a lot that I've been able to learn from studying this one currency pair. I actually believe, and I always try to tell people that this is like, I usually say it to guys, and it's kind of like a little bit of a little bit of locker room talk. If I'm, should I say this right now? My stepmom's in this group. Yeah. But it's kind of like a little bit of locker room talk, just a bit. You feel me? And I say that, see, but it doesn't make sense now. Damn it. Should I start this whole recording over again? Oh, I might have to crop that out. I'm gonna say it anyways, but
Yeah, just crop it.
I'm gonna say it anyways. But so your currency pair is like, it's like your woman. You feel me? Like I said, like when you like as a man, like when I'm talking to the guys, I'm like the currency pair that you choose is like your woman. You feel me? Like you study one woman and you understand their mannerisms. You understand when they're mad. You understand when they're getting ready to move, when they're getting ready to, what's required, what it does on a typical
Mhm.
basis. But people get started off in the market and they try to learn all kinds of different currency pairs, all kinds of different things. They're looking here, they're looking there, they're all over the place. And because of that, they never actually learn the mannerisms and the tendencies of that currency pair that they're actually watching. You know what I'm saying? They never see those things. Um, so I always recommend that people take their time and they start off by learning one currency pair. You pick one,
Mhm.
one that you stick to. So I'm gonna crop that out.
Okay.
Maybe or maybe not. I haven't decided. That's not too bad, right? That's not too
Yeah,
bad,
it
right?
wasn't too bad. It
All
wasn't
right.
too bad.
I'm just the reason why I was like I might crop it out is because I trade a lot of currency pairs, but I'm a one woman
Mhm.
man, you know what I'm saying? But I trade so it
No,
doesn't
no,
always
no.
relate. It only relates
I-
to a point and then you stop. It only
Yes.
makes
Like
sense
you have to take
at
pieces
this
from
part.
everything.
Take okay, cool, take pieces. I'll leave it then because I think it's a good piece. But I usually say
Yes.
that to the guys on the side, and we got a lot of ladies. I want to be respectful. I'm just saying. But with all that being said, this is one of my favorite lessons. Lesson number three is on our breaches, right? Um,
Yes.
a couple of the things that we've learned to this point so far. We've learned about our quarter levels. Can you walk me through at this time? How do I set my quarter levels? If you open the chart and you see it just like this, right? This is what you see initially. All you see, I'm going to move you off. I don't think you see yourself. I see you. I don't know if you do. I'm going to move you off the screen for
I
now,
see
though.
myself a little bit, but well, no, I don't
Okay.
see myself on your screen. I just see it on
Okay.
my screen.
And we have our quarters. Give me the quarters that you would use if you had just looked at this chart and it was naked. It was looking, it's this is the bear chart. How do you mark your quarter levels?
Okay. So with quarter levels, would it start like the bottom quarter level? Would it be at the point 55? Is that right?
You said, would the bottom quarter level be at the point 55? Let's see.
Yes.
So I'm gonna just click on that. Why is that pink? I don't know, but I like it. Um, point 55. Let's see. 55. Bum. Ooh, sniper. Sniper, sniper, sniper. Ooh, look at her. Look at you go. Okay, okay, okay. I see you.
Okay.
What else? What
And
else we got?
then would it go to point this is where I get kind of mixed up sometimes. Would it go to point 57 or 575?
You got which
No.
one? You're one for one. You're one for one right now. Which one? You got to pick one.
um, I would say 575.
Ooh. Okay, you got it right. I give you full
Okay.
credit. She's like, okay.
And then would it be 59? No, it wouldn't be 59. It would be 6. Would it be?
Is that your final answer?
Wait, no, it's not. Give me a second. Okay, yes, I'm gonna say point 0.6.
She's on a roll. Final answer. I'm gonna stand on that. Final answer.
Yes, that's
Because we
the
standing
answer.
on business. Ooh, she got a saucy chart. Look at that sniper entry right there off the rip. You shooting like that? How you did you see that? Are you catching these plays like that?
I'm trying to.
It's coming. Golly, look at that. Off of them quarters? All right, cool. I'm gonna go back because I already got this marked, or should I just start from scratch? I just start from scratch since we got this pink and it look good. Bum 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 bum. All right, not very good. That is one of the core. It's one of our lessons, right? So the next thing that we did is we talked about like our list, things like that. We're not gonna go over the list right now.
Yeah,
I don't know if you got that part down. That's not what you wanted to
yeah.
discuss. I don't want to take too much time. We'll be specific, about what we're working on right now. Um, this is definitely going. What direction do you think this is gonna go to? What do you think it does from the 575?
Um, I think it's going to continue down.
I love that. I love that you said that with conviction. I do too. I do too. We're on the same page. The point at which the point at which it goes down is my question now, though. I definitely see a pullback coming here, maybe somewhere here,
Hmm.
possibly, right? We'll talk more about that. I'm not going to confuse you, but this is the first portion of what we've gone over. I went ahead and in this, what we're going to want to take, uh, we're going to want to understand is we're going to want to see in the levels that we've set, right?
Hmm.
Um, what are these are the most, these are the really the only important levels, right? The next quarter levels would be like the, um, it would be like the 6 to 5 up here,
Hmm.
right? But until we get through this 6.0, this doesn't matter. There's a decision that has to be made here. That decision is whether we go to the sell side or whether we go to the buy side. Is there a potential for us to buy to here and then sell to here? That's something that people wouldn't expect. But we see that there's this area that the market has traded to multiple times, right? It could also stop short and just pull back that far and then go. But when it happens, we will know, right? But with that being said, the reason why I mentioned that to you is because with these three levels, it's given us a closer range of what to focus on. Rather than thinking about this entire big market, we're thinking about the things that matter to us in this most recent time. If something changes here, we make a new decision, right? So we make a decision now, we make a decision later. But for now, this is all we're focused on, right? If we focus on it now, what we can see are a couple of things that I'll bring to your attention. We want to understand what is the time frame that we're trading on. This is the 4 hour time frame. The 4 hour time frame is going to be, I would probably say, one of the best time frames for you to trade on as a, if you're a swing trader, maybe you're holding your trades, which is what I like to do on these quarters. We're going to look for entries on the lower time frame, the 30-minute, 15-minute, 1 hour. We're going to look for real sniper entries. However, the trend of the market, which is also what we learned in that second lesson, is going to be well defined on the 4 hour time frame and above. You can
Okay.
find the trend on the monthly, and you might say that overall this has been a downtrend, right? This is the weekly. You don't probably don't even need to go to the monthly, but then you can also go and find the trend on the daily and say that this has still been significantly a downtrend, right? You go to the 4 hour time frame and you can see even more similarly that we have maybe from high to low, we also have our downtrend, right? So I want to bring these two concepts together for you just to strengthen it a bit. When we put our quarter levels on the chart, right, we can see whether the market is in an uptrend or a downtrend automatically. Because the first question we want to ask is we have our low quarter, we have our high quarter, we have the quarter that we're trading at now. If this is the top and this is the bottom and this is the middle, where are we currently trading in relation to, sorry, dog, where are we currently trading in relation to that, right? Where are we currently trading at in relation to that? We would say that we're trading at the middle. If we're trading at the
Hmm.
middle and it started at the top, Where are we in the current market? It's a question for you.
Here. um, we're at the quarter level.
We are at the quarter level. That is a correct answer. It's not the answer. So let me say it again. If our higher quarter is at the top of the market and our lower quarter is at the bottom of the market, where are we at in relation to our current market?
In the middle of the market.
We're in the middle.
Okay.
We're in the middle. From the middle, the next place that we go to has yet to be determined, but we can anticipate
Mm-hmm.
that we're going to go to either the high or to the low.
Mm-hmm.
So now we look for signs to build a case, is how I try to look at it. You're building an argument. That's all it is. In this situation, when it comes to the market overall, you cannot predict the market. You can increase the probability of you being correct, but you cannot predict the market, right? You can't predict the market. People that think they can, they're lying to themselves. But the
Yeah.
goal is to increase the probability. So, how do we do that? We ask ourselves questions and we create a case. Let's say, for example, that we're in the middle. Since we're in the middle, we've identified that you can either go to, I want you to do something now. Pull out your phone and go to the group chat, and you're going to write the message NZD USD is at its quarter in the community chat.
Okay.
Hmm.
Okay.
That's what I'm talking about. That's what I'm talking about. Yeet. Hmm. Let me see. What's my Oh, you're watching me find this. Oh, she's watching me type that in. That was embarrassing. Oh, you're not supposed to see that part.
I didn't look. I didn't look. Don't worry about
Ah,
it.
that was embarrassing. Let me see real quick. Let me see. You gotta wait till I post it. You know who be coming with the gifts? He would know which one. Oh, that's creepy. I'm not gonna do that one. You want to see which one I said was creepy? Look at this.
Yes, actually.
She's like, yeah, dude. What are you talking about? Imagine if you said that and I said this. This is weird. I don't even know why they got this. You know Quagmire, right?
Yes. Oh. Mm.
I typed in looking. I'm gonna probably use this one, but this is I'm like,
That
nah.
is so cringe.
It's like, oh, yeah, that was appropriate. Ooh. And then, oh, my cheeks hurt, yo. Ooh, been smiling all day.
Smiling. Yep.
Hmm. Yup, yup,
Well, that's a
yup.
good sign, though. At least you've been
And then I gotta
smiling.
come in and be like, gotta drop the uh, what do you call them? GIF? Uh, um, to follow my guy Wheezy's energy. That man love a GIF. That man love him a gift for real. Anyways, let's continue so I don't keep you all night. So the next thing, so you see, I think this is, I'll keep it for now. I'll keep that to myself for now. But with that being said, as we have our quarter levels, right? We've identified the three of them. We ask ourselves questions. As we're asking ourselves questions, we're building a case. A case can be like an argument, right?
Hmm.
You know, it can be, it's your confirmation checklist. It needs to have this, and this in order for me to enter into the trade, right? I need this, and this in order for me to enter into the trade. Um, these are the things that I require. With that being said, we would look to build a case for where the market will go to next, right?
Hmm.
In doing so, I use my quarters. I understand that this is my high, this is my low. I'm in the middle. Now, when I ask
Hmm.
myself the question, where am I at? I'm in the middle. I'm lower than the high, but I'm higher than the low. I've started to trade away from the highs. And as me and you, the two of us, we both, you know, we believe that we would eventually be trading to the lows, right?
Hmm.
We don't predict the market, so we can't say when we're going to. Let me see if this tool is working really quickly. I'm gonna stop the recording real quick. I'm gonna keep the share, but I'm gonna stop the recording. Let me see. Or am I gonna show it in the group? What should I do? I'm gonna. All right. So with that being said, so my quarter levels as I have them, right? If I ask myself where am I at in the current market, and I look at the quarter levels that are closest to where I'm trading at, and I look at the high, and I can go ahead and create the trend. You know, I didn't have to do it here. I could have done it from the quarter because that's where we
Hmm.
last rejected from, right? And I look to ask myself, what is the market's trend? The trend is going to be defined by either, how do you define the trend?
A trend is defined by 2 points,
Okay, continue. You have more?
and then 3 points determine. Shoot, I have it written down. Hold
Nope,
on.
no notes, no notes. I'll answer that
Oh.
part for you and we'll continue. So I said two points make the trend, but the third point, it validates the trend. It makes it
Validate
stronger, it
it.
makes it real, right? Let's talk about directionally. How do you define a trend? You're looking, you're peeking
I'm
at your
writing.
notes.
I'm
Uh-huh, you
writing.
better be. How do you define the trend? How do you define the trend?
um, I thought you defined it by the points,
You
like
do?
your higher lows and your lower
Aha,
lows.
that's the words that
Oh,
I
okay.
wanted to hear.
Oh, okay.
So we find our high, and then we find our lower high, our lower high. Even this high that comes after, right? When I compare one to the other, we might actually say that this is where price created its last high. It looks like it broke out just a little bit above there, but price immediately rejected. So these are like equal highs. I would expect for price to come back here and sweep these highs at some point, maybe. Um, but um, Yeah, but we have our high, and then we have our lower high, our lower high, lower high. We have where price breaks above it and touches on the top, right, without
Mhm.
creating a higher high. And then we have this next touch right here. So we can say that this is a confirmed downtrend, right? I did that by
Mhm.
looking at the top of my quarter level, looking at the bottom of my quarter level, connecting those levels. I can go
Mhm.
ahead and do the same thing over here just as well and say in the current market from here to here, what is the trend that I am trading in, right? And we may say that we are in an overall downtrend,
Mhm.
right? This is a downtrend. Um, we are going to be on the sell side of the market, right? So that is the first two lessons with a little bit of, I think, a clearer even explanation on these, the trend, the lines with the
Mhm.
quarters. Um, Lesson number three, lesson number three was on the breaches of structure,
Mm,
right? And this comes from number one, we want to look at how we are. Let me see what time frame I'm gonna do this on. Daily's good, 4 hours good. We'll do it on the daily. Eh, yeah, we could do it on the daily over here. That's cool. So, what did I do with this? What is this here for? So we've identified where we are in the market. We know our quarters. We can see what the market's saying. We kind of have an idea of the direction that the market's going into. But now we want to make sure that we're able to enter into the market, that we're able to execute on what it is that we're doing, right? With that being said, we have our high, we have our low, higher highs or lower highs, lower lows. That's how we identify the trend, the direction of the market, right? Now we're looking for what we call our breaches is what we talked about. Our breaches is how we confirm the continued lower levels of structure. We're still continuing to confirm our direction, I should say. The way that I would look at a breach would be essentially now that we've identified, and remember, I pulled this from here originally, right?
mhm,
Because we already have one even before that. But now that we've identified that this market is in a downtrend, the next thing that we're looking to do in that sense is we're looking to trade in alignment with the trend that has been created, right? We want to trade in alignment with the trend that has been created. So if it is a downtrend, we want to trade with the downtrend, with the downtrend until something tells us that it's no longer a downtrend, which would
mhm,
be a higher high, right? It would be a higher high, or if it was an uptrend, it would be a lower low, right? That's what would tell you that the trend was over. If this was the uptrend, this lower low, since this low is lower than this low, right?
mhm,
It tells you that the downtrend is finished, right? With that being said, how do we identify those continuation opportunities? The way that we identify those continuation opportunities is we're going to look at the areas maybe around our quarters or between them where the market tests at multiple times, right? The areas where the market tests multiple times. When I say tests, what I mean is that the market does something like this. Let me lock this real quick. The market does something, or let me use, it's fine. I'll lock it. The market does something like this. We trade to here, we buy. We trade back to here, we buy. That's one test, that's two tests of our 6.0 level, right? The market tests again, it buys. It tests again, it buys. After all of those tests of this level, right? We can go ahead and circle this while we're practicing. But after the test of this level, all of these levels, four tests is a strong test. That's a lot of testing. It's a lot of testing. But after all of those tests of the market, we get what I call the breach. The breach is another term for like a break of structure, right? We get what is called the breach. This is the level here, and I'm going to show you why it's not actually even valid. It worked, but it's not necessarily completely valid yet, right? This is the level that breached these lows. We broke the structure, right? We created the low that is now the lower low in the downtrend. I want you
mhm,
to keep that in mind. So we created, I'm going to delete all that, the low that is the lower low in this downtrend. This low is lower than this low. That is the structure. So what we've done is we've identified the structure that the market has tested at 4 times here, multiple times. And now we've identified the area where the market broke through that structure, right? We have the opportunity now to enter the market. Let's say, for example, that we actually saw the market right here,
Hmm.
right? This would be our breach. This would be our breach. We just breached the lows. Now that we've breached the lows, we're going to start to shift our mindset. We're going to look for the market. Maybe the market becomes imbalanced to where we have all these sell side candles. You remember our previous lesson? We have all these sell side candles, red, 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 and there's
Hmm.
really no green in the mix of it, right? We want it to be a balanced market. So we're going to anticipate that the market is going to trade back in. But the reason why we think that is because we identified the breach. We identified the area where the market swept the lows. Here's the thing though, like I said, this one is not valid because it swept those internal lows, right? It swept these lows, but I don't believe that this market, so if it did sweep these lows, it would be, that is still 35 pips, right? But if it did sweep these lows and end up closing down here where my arrow is at, and then trade back, then I would be looking to take this trade to the short side, right? But
Okay.
because it didn't do that and it actually creates a higher low, we know that this market is probably likely to continue and actually even trade above these highs, right? We're going to actually anticipate that the market is going to trade above these highs, maybe do something like this, and then eventually come back in here, right?
Hmm.
So I believe the way that it actually played out was that the market, it did go up, 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 up. Oh, let me shut my. Oh, I'm just kidding. But but this was the original pivot that I was talking. It did pull back off of that and it did retest, so it worked. It still worked, but it worked like this. And this was the trade, and the stop loss would have to be right there. So it worked, but this was not a trade that met my requirements.
Hmm.
It didn't meet my specification, right? I'll show you what does. So as the market trades forward, that is essentially, that is a breach though, but it's a breach of these internal levels, right? We're going to look now for the market to sweep the highs. We'll talk about liquidity sweeps and things like that. We should get the push. Bump, bump. That's the push. We clear the highs, right? And now that we've cleared these highs, we are going to anticipate that the market is going to continue to sell. Well, no, we don't anticipate that yet. But if the market does sell back into this structure, and especially if it does sell back into this, the levels that I would look for would be this level because that was the previous lows. Now I would be anticipating this market continuing to sell to the downside, right? This is, again, remember, this was the breach. This was the breach of the internal lows. Now
Hmm.
we've re-entered that same level, that same structure. Markets up here, that's actually 65 pips. Prices would be expected to trade down to the lows. This trade does not meet my requirements. What I might look for is I might look for price to trade back to here, maybe. And if it does trade back to here, then I can enter like this and it would now meet my requirements. Let's see if it does that. Uh, it did it perfectly. That's a beautiful thing. Let me see if it actually touches it. It didn't actually touch it, but it did it perfectly. I'm gonna take that, right? I'm gonna take that because that's close enough. And then I would expect for price to trade back into the lows. Now I'm looking for at least a 1 to 3, right? The way that we find this, why did I see this entry? Why did I look at this as an entry, right? The reason why I looked at this part as an entry is because of the fact that I was able to identify. Uh, oh no. Oh no, oh no. I'm right here. All right, cool. I'm like, I lost myself. What was I gonna say though? Shoot. All right, we cleared the highs. We traded back in. We,
Talking about the one to threes.
hmm So we see here that similar to here, the market creates a low, it bounces a low, it bounces a low, it bounces a low, it bounces. The market creates two lows here just as well, right? On a lower time frame, I don't know if it does bounce here, right? But it doesn't. It immediately breaches the lows. If we even pull this off to the side, these lows are actually even more significant because you could see that it actually touches not just those 2 points, but it also touches here. It also touches here. It also touches here. It also touches here, right? And that would be considered the breach. But off of the breach, now I'm looking for the retest of that broken structure, and I'm looking to take my continuation from there, right? So remember, we've already defined the trend. This is a downtrend, right? We already swept the highs, which is a liquidity sweep, which we'll learn about on the next lesson. Now we've traded back into structure, right? And if we trade below here, now we get a compound entry. And I'm going to show you what that looks like. Let me see if it actually does what I want it to make me look good. So we get the pullback. This is what you call back testing your strategy, right? This is what we call back testing your strategy. So we get the pullback. Do we get the pullback? Price? Nope, we don't. Price sells, right? Price sells. Eventually, did it sell further? Eventually, it sells further. Not a problem. Because guess what? This breach, this break of structure is now more significant. And this low becomes my first take profit. The high comes above the candle that started the breach. That's an important point. So now that we've identified this breach, right? If I look at this breach on the 4 hour time frame, this level is only 3 candles. On the daily time frame, it's only one. On the 1 hour time frame, we're seeing it a little bit more broadly, right? But my first take profit would be the lows, right? Where we start to see the market retrace. If it doesn't retrace here and it goes lower, let me see. This is where the market retraces. We get this bullish engulfing candle. As we get the bullish engulfing candle, we are waiting. We haven't entered the trade yet. Oh, see, we didn't get the bullish engulfing candle. Guess what? It don't matter. It doesn't matter. Even if the market keeps on selling. Let me see if it's gonna go further. Even if it keeps selling, it doesn't matter. We're not in the trade. We're not winning. We're not losing. We're being patient. But we're waiting in anticipation, expecting that the market is going to pull back to test this level. And guess what? This wick, it's not good enough for me. I like full body candle closures. This wick is not good enough for me. Technically, on the lower time frame, this market did trade back into our structure. It came back and it tests all of these wicks, right? And it technically is a good test. Right now, we got a 1 to 2 to the lows. If I trade it to here, we got a 1 to 6. It's not good enough. I need it to pull back further. I need more, right? I'm looking for a 1 to 3, honestly, which would be a sweep of these lows, right? That's a 2.5. Now we wait for price to trade. I want a full candle. This is a body of the candle, right? We talked about that on lesson 2 as well. Body,
Mm-hmm.
wick. I don't like to trade out of zones like that with wicks. I like to trade out of zones like that with full body candle closures like that. Let me see. I need more though, because you still haven't This touched the zone. This has not made it there
Yeah.
yet. So I
Hmm.
want you all the way up here. Let me get one more candle. I didn't get it. Now you start to be like, damn, I missed my shot. If I missed it, I miss it. But I'm waiting. I'm going to stand on my rule. This is my business. This is what I believe, right? I want full body candle closure up here. We're still not in the trades yet. We're being patient. We're waiting. This is like a whole day has passed by. But I would be pissed. I would be pissed. I'd be kind of tight that I missed my shot. I would. Let me see. So this is a 2.9. Let me see. Give me something. I like full body candle closures. Full body candle closures. I might have to accept it. Mm, mm. It might not come back here. All right, that's fine though, because it did come back into the zone. I just didn't get my execution, but
Hmm.
the strategy still works, right? Now we're seeing big wicks up here. We have our new lows kind of right here. There are lows right here, right? And then we have this next candle that, which one does it? This one, right? These two candles that breach the
Hmm.
lows. I'm looking for the candle that takes the lows that brings us to a lower level. I want that full body candle closure. I still believe. I might not get it, but I still believe, right? We get our sell price trades back into structure. We get a big wick that kind of mitigates this imbalance here. And now we are trading in this lower level here. So with that being said, ooh, give it to me. Come through. It's got to come through because I said what I said. Come through. I'm gonna be happy as hell if it do. I ain't gonna hold you. See, this is where that market be will be. I don't like to trade in these areas here. So this entire space is kind of a no trade zone for me in where it is
Hmm.
right now. I need a breach. This is kind of the breach. This pulls back into
Hmm.
here, right? Which is valid. It's fair, right? It's a good play, right? You may enter the market right here and be in this, but this is chop. You see how significant this move was?
Yeah.
You ain't have to really question it. I don't really like this. I would like to see price either buy above and trade all the way up to here, right? Or break below and do it with conviction. Do it with like,
Hmm.
I'm doing this now. This whole thing, I don't like it. You know what I'm saying? If you're doing it on the higher time frame, you could trade, in the ranges, buy the bottom, no, no, no. But I don't like to do that. I'm trading, nope, I'm not doing that anymore because I'm trading in alignment with the trend. That's what I need to do. Um, my guys just made a group for me and they called it let me see. Look, they called it no counter trend. We got some,
Hmm.
we got some sauce coming for y'all for real, for real. But they said no counter trend trading. We gotta trade with the trend. But with that being said, let's see what we get. Uh-huh. Back above the quarter. Lord, stop playing with me. Just go.
Yeah, it's just sitting there.
Being patient though. We're just gonna be patient. We might had to go, we waited, we showed up to work. You know what I'm saying? This is work. When I say showed up to work, showed up to the office. We got in front of our computer, we put in our time, and it just hasn't paid off. We didn't take any trade. It was all in the chop. We had anticipated a higher pull. We waited for the breach. The breach didn't come. We'll come and look back tomorrow. We got to go and actually clock into our 9 to 5. We got to actually go take care of the kids. We got to live
Right.
normal life. I be feeling like Clark Kent and Superman. We're putting our mask on and we're going, into the world. You know what I'm saying? But at
Like
that
back
point
to
in time,
reality.
we're waiting for one of these things to happen. We now break the high. I'm fully waiting on my. Damn it, bro. Oh no, it's gonna happen. Come on, bro. What? This is annoying. This is no man's zone. Mm-hmm. Mm-hmm. Mm-hmm.
Mm-hmm. Mm-hmm.
Is that enough?
Mm. There you go.
Golly, that was annoying. Yo, Lord have mercy, bro. That was so long. Golly. Anyways, bomb. Stop loss goes above the high. This is about 20 pips. This is about 20 pips. That's a very good risk to reward. We're trading to the lows. So this is the low. I have
Mm.
my entry here at the break. I've got my stop loss above the high, and I'm trading to the lows. That is, what did I say? Clemente noticed. This is saying it's a 1 to 3, or it ain't for me. You know what I'm saying? That's just my thing. Other people have their own methods. Whatever works for
Yeah.
you is for you. You could do, I don't do 1 to 1s. I do 1 to 3s for real. But if it ain't a 1 to 3, it ain't for me. I'm trading back to the lows. This method will always give you, will, most times it'll give you a
Mm-hmm.
1 to 3. And we'll trade it forward. Even if it go,
Wow.
wow. I love that. That is so beautiful. Thank you for making me look good. Sheesh. Sheesh, make it look like I know what I'm talking about. And then price trades back into structure. Full body candle closure. Sweep of the highs. We're above the quarter level. Now we want to see how the market responds to the psychological level. That 6.0 is key. If we hit the 6.0 and make a higher high and trade above here, we are buyers in the market. If we trade back to the 6.0 aggressively, we close low like this, and then we get a maybe we get a bearish engulfing candle. Not enough. Not enough. Market gap down. It didn't even process that. That was probably a weekend open that happened on a Sunday. That was when the market first opened. It gapped down. The whole time it's been in this chop. We
Mm-hmm.
don't trade here. The whole time it's been in this chop. We trade outside to sweep the highs, right? Price immediately gaps down to the bottom of the range, and immediately we are now below our quarter level. We are already in profits, right? We're already up over 50 pips, and we're almost at a 1 to 3 before we even hit our target. In this case, this is going to be my target number one. It's like 60 pips, right? A 1 to 3. On the bigger end, I might be aiming to target all the way down here, right? Which could be significantly bigger, right? It could be a 1 to 6,
Mm-hmm.
right? But I, at minimum, want a 1 to 3. We use that breach to figure that out. Then we get, boom, that's good. We're outside of the chop, outside of the chop. We already hit, did we hit our first take profit? Nope, almost. First target's hit. Up, first target's hit. Bum. 60 pips, 1 to 3. That means you invested, you risked $1, you made $3. You risked $100, you made $300. You risked 50, you made 150 off of that move alone. That is lesson number 3, the breach. You can continue to do this again and again. You're looking for the same things. Eventually, now we've created the lows because remember, we traded to the lows. We traded to the lows. Now I'm
Hmm.
looking at the further lows. This is the low that I'm now looking for, right? But you want to see something interesting? Now that we've created these equal lows, you know what I'm going to look for? I may look for a breach of this level now just as well. And this is where we get what we call our compound entries. It still needs to meet our requirement and be a 1
Hmm.
to 3, but I'm now trading to the exact same level or potentially to take the lows, right? We're not in this trade yet. There's no trade here, but because of the fact that we're now predicting the future, right? We know that by history, when the market has created these even lows here, here, it eventually comes through and pushes, right? We see the same thing. It creates this low here. It eventually pushes. We've already identified that the market has started to create these lows here and here and here and here, right? You can see that, right? Can you?
Yes.
All right. We've also, remember, we've also identified that we are in, this line is just floating here now, but we've also identified that we are in the higher time frame downtrends, right? We did that part too, right?
Yes.
Okay, cool. Oh, that's why it's floating, because this was probably from, let me see. That can't be that bad. I don't know what's going on with that. Shit. I don't know what's going on with that. But we don't need it anymore. So I like to clean my charts as I go. So now I'm already anticipating that we're going to sweep these lows the same way. Small, 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 but mighty.
Yeah.
This is, I probably would still have my stop loss above here. It's a 1 to 2. It's not good enough for me. Not good enough yet. Even if that is the breach, I wouldn't take the trade, unfortunately. Sunday candle, we gapped open, or that's Monday. Now we're trading below, and now I can do something more so like this. Now I'm going to use this high, or I'll probably use, like I said before in the previous lesson, we're going to use the candle that breached the lows. These are our lows. These are the two most prominent lows. This is the candle that took us there. This is the
Hmm.
breach candle. So we're going to put this right here, and that's going to be our stop loss. Now, does it meet our rules? Is it a 1 to 3? You can look right here and it'll say a number. It'll say 3 if it's a 1 to 3. This is a 1 to 4.7. So if I risk $15, so for every $1 I'm risking, I'm looking to gain $4.58. Trading back to the lows, continuation trade. I'm already in the trade technically, right? Already. And we just got another entry. So we play this forward. It don't always work, so don't look at me crazy. We take our shots. We take our shots. We always shoot and we trust our stuff, but it doesn't always work out. Stop loss hit, negative 15 pips. I realized that, remember, this is where I had the original stop loss.
Hmm.
That's where I had the original stop loss. So maybe we just swept liquidity inside. We tested back at our quarter level one more time, and now we're taking our sells off of our quarter. our re-entry position now becomes off of this block here, right? We've already breached the lows, right? My stop loss is now going to go above the candle that we just tested that originally brought us below the zero point 0.6 quarter level, and we have a much more significant trade. Now we're looking at a 1 to 10. I might go ahead and say, you know what? Let me be a little conservative. I'll give
Mm.
myself just a little bit of wiggle room, 15 pips. I'll take the 1 to 7. I'll place my trade accordingly. 1 to 7 is like maybe I say that I'm going to risk, 2% of my account. So the loss portion, I'm going to make this 15 pip loss represent that 2%. You know what I'm saying? But when I see
Mm.
that 2%, that means that when it hits target, that's going to be a 14% gain on my account. Does that make sense? Because it's a 1 to 7 and we risk 2%.
Yes, and we put two. So okay.
Okay. So now we trade it forward. Guess what? Oh, thank you, God. Because I was about to say, I was going to prompt you and say, there's a possibility that the stop loss does get hit again, right? If I took the trade here and my stop loss got hit and my stop loss was 15 pips, that means I would be negative 15 pips. If it hit again, that means I would be negative 15 pips again. I would be down 30 pips, but my target is 100, so it doesn't matter. But there was a possibility that the stop loss would get hit again. So our
Mm-hmm.
target number one needs to be at least what? For me personally, it's a 1 to 3 or it ain't for me. That's
Yeah.
take profit number one. When I do this correctly and I use the candle that it rejects off of, all of those different things, take profit one typically tends to be around the lows. So remember, we gave ourselves some wiggle room. We used the candle
Mm-hmm.
that took us down there, so it was 10 pips. So I would automatically assume that the low here was about 30 pips from here to here, right? And that would be my take profit one. It's like a geometry to it. It's almost like mathematical how it
Mm-hmm.
shakes out. You know what I'm saying? But when I trade back to the low, this low that helped us breach, it gives us, or that we traded away from it, we get a 1 to 3 in this case. Our trade immediately after just two candles, right? We waited all this time for price to trade back here. In two candles, it gave us all our money. Patience, 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 payday. Big payday. We got a 1 to 4 off rip, but we're trading to the lows. Guess what just happened though? We just breached the lows again. We create an imbalance here, an order block. We already secure about 25% of our trade. If the market pulls back, I probably would not enter again because it would be just too close to the original entry,
Mm-hmm.
right? 50 pips, that could have been take profit one. I might have already had taken profit at the lows, but we're looking for price to trade back down to the lows.
Mm-hmm.
That's how it happens sometimes, very close. But you know how I find those targets? Oh, that's only 100 pips. Sometimes it happens like that, but I stay in this trade until we create a higher high. The higher high would be right here. If we buy above here, then I exit the trade. But as long as we stay, I exit here. So
Yeah.
I ain't even catch all this, which is like sometimes you can't be greedy, right? You know, is it really a higher high? Because this could be the high right here. We stay in this trade. we do have this big imbalanced area up here just as well. But
Mhm.
I probably honestly, me personally, I would have exited at the break of this
There.
high. Yep. I would have exited and I took my 25% off the top automatically. So I was already out a little bit here and I just exit the rest here. It's a 1 to 5 instead of a 1 to, you know, 7, or whatever the case may be. It ends up becoming something like that. And then if the market does pull back, guess what? I'm looking to do the same thing again, right? I'm looking to do the same thing again. I want to keep it a 1 to 7, right? We actually didn't breach a significant low. So I might not even take a trade here, and it definitely does not line up. So I scratch that. It doesn't work for me. But if we pull back into structure and I'm now outside of the trade, because now I'm not in the trade anymore because of the fact that I closed out here, right? So I exited here and I re-entered when it pulled back here and I put my stop loss below the high, above the high. And guess what? I now trade back to the low and I just do it again. I took
Okay.
my partial profit here. When price trades back to structure here, I'm going to use that same level, put my stop loss above the highs. So I risked 15 pips, 15 pips, 15 pips, right? 15 pips, 15 pips, 15 pips. My target 140 pips, 100 pips, and then now 90 pips. And I only risked 45 to do so. So now as price trades away, we target the lows once again. The initial take profit, what is my take profit one?
1 to 3.
A 1 to 3? Okay, let's see. Did we hit take profit one before the pullback? Oh, let me
Yes.
show you. Did we hit take profit one before the pullback?
Yes.
We hit take profit one. We move our stop loss potentially. Some people don't move their stop loss to break even, but I typically will move my stop loss to break even because worst case scenario, I took 25% here, then I took another 25% here, right? Even if it doesn't go to my final target, but I still look for the final target. So 1 to 6, one to
1 to
six,
6.
1 to 7, just about. And we're still anticipating the lows, but if it trades back to our entry, we'll be out the trade.
So you're out.
Yep. Next position was 40, 50 pips. That was the same entry. So we only hit take profit one. We didn't get nothing else. Market took us out. And guess what? That could be it. We don't have to continue following it. We're not going to continue doing more lessons. I think this is a good closing point. So the video is
Mm-hmm.
not too long and so that we're not too tired. But now the market will probably test this low and sweep these areas here, or maybe it's done for. You know what I'm saying? But that's how you use the concept from lesson number.
You and these fingers.
I feel like I need to stretch my fingers so this feels more comfortable, right? Lesson number
Okay.
three.
That
Does
makes a
that
lot more
make
sense.
that makes it a lot more sense,
That
a
makes a
little
lot
bit
more
more
sense.
clear for you?
Yeah.
Okay,
Yes,
cool.
definitely.
I'm gonna post this video. You can go back and you can watch it just as well. And then you can always go back and watch the previous lessons, just as well.
Yeah.
And then if you have any questions, reach out to me. Um, you know, let's stay locked in. I'm here for you.
Yes.
This is a safe space. You could go, you can learn here, you can grow here, you can ask questions, you can get uncomfortable. You feel me? Like it's okay to be uncomfortable. We're seeing, you're not seeing my charts anymore. It's okay to be uncomfortable in the space. One of the things that I believe is that this is not to you. I mean, it is for you if you accept it, but I only receive what I want. You could
Mm-hmm.
be a fool for a moment, right? Or you could be a fool for life. What I mean by that is that if you don't know something, some people won't ask the question because they're scared to look like a fool in that moment. They're scared of the environment, the judgment, the whatever, so they don't ask the question. But if you don't ask the question, you never gain the awareness. You never have the
Hmm.
understanding. You never get a chance to develop yourself or to build in that or through that. You know what I'm saying? So you have to give yourself that opportunity to do so. So ask the questions, even if you feel nervous, even if you feel shy, you'll only feel that for a little bit of time, for a short while, and then eventually will pass. And then once it does pass, you'll have the knowledge that was gained from the question that you asked. So we grow through those uncomfortable moments. You know what I'm saying? So ask questions. There's probably going to be other people in the group. As it grows, there will
Yeah.
definitely be other people in the group that have the same questions. And eventually you're going to be the person that has the answers to the questions. And
Yes.
because you wanted an OGs, you know what I'm saying? You've been here
Of
from
course.
Jump Street.
Of course.
But
I'm gonna be here.
for real, you know what I'm saying? But with that being said, I'm gonna let you go. I hope you have an amazing rest of your night. And
Thank you.
we'll catch up again soon.
All right. Thank you. Have a good night.
Take care. Peace.